Hey guys, wanted to do this video for you, kind of point out something that I've been sharing with you guys for a while. The market opportunity in real estate that we're going to take advantage of at Bell Capital is there are a lot of assets out there that we know that we can swoop in and buy at a discount, maybe below replacement cost or below last trade. It'll be less than what the last person purchased it for. That is happening in the market. And here's why this video, I wanted to make it, but I was kind of like, I don't really do it. I don't like flowing power to stuff like that because it's negative. But the fact of the matter is, everybody's piling on to Brandon Turner and his deal, saying he lost $15 million worth of investor capital. Yes, that sucks. I feel bad for him. I feel bad for his investors. But if you really think about this business and why you're in this business at all, your goal is to buy from distressed sellers, great assets that are pretty much stabilized at a time in the market that you would never get the opportunity to do it. This is happening right now. It just so happened to be happening to somebody that we see obvious, but any other time it's just happening to institutions. It'll happen to Blackstone, it'll happen to Starwood, it'll happen to Greystar, it happened to Equity Residential, all these different big companies, and everybody, no, everyone's like, oh, they're losing, they're doing this. Rather than see this like, hey, now's the time. Now's the time to take action. I'm not saying go capitalize on other people's losses, but somebody's going to capitalize on other people's losses. This is where the money is made. Everyone talks about 2008. Why do you think most of the people who are still in the business from 19 in the 90s to 2000s till today are billionaires and they have billions of assets under management? Where do you think they got those assets from? They got in the market at a time when the market was down. It's no different from taking advantage of the dip in the marketplace in the stock market where you're going to buy low and then hopefully your value of your assets continue to go or your stock market goes up. Real estate's the same. Difference of it, real estate's tethered to the debt market. That situation that happened in Texas was a debt problem on a great asset. It was a distressed seller, probably on an asset that had been pretty much stabilized and they had executed a plan. That's all the deals that we're all looking for. So yes, it matters when somebody's clickbaiting, somebody else is, kicking them while they're down. Don't do that, guys. I'm looking for assets that right now, I told you, as an institution, we just saw a deal that they have to sell. They bought for 90 million. I'm sorry, they bought for 120 million. They came to market at a guidance price of 90, and I came in at 73. And we didn't get it. I think somebody else came in at 80. That is no different. Someone's going to lose their equity. It's just whether you are going to take advantage of an opportunity or you're going to miss the opportunity by pointing fingers and say, you know what, that's why I don't do what they do. Like, that's a problem, guys. So if you're a syndicator or you're a fund manager or you're out raising money, yeah, I know you're like, oh, we don't like the fact that there's fees and we don't like the fact that there's this. This is a business. And if you are not in this business, if you're an investor, naturally you want to do your due diligence, you want to make sure the assets are good. And you should be looking at a person like myself that's a fund manager, syndicator that's out in the market looking for opportunities like that to buy something and that our investors benefit from an opportunity. Now, it's shitty to say, but it's happening. And if you don't take advantage of it, then you will be like, oh, everything's overpriced. Why was it overpriced? Because the opportunity for you to get something that was underpriced, that was an opportunity for you to actually buy something that was a great asset at a discount and invest in a fund with an operator, syndicator, or sponsor like myself that is going after opportunities like this in the market that you couldn't get, and your returns will be great. Then yeah, I mean, don't do this. I mean, just go, you know, put your money in treasury bond and get 4% and get taxed, go get earned income or whatever you're going to get, and just do that. But if you're going to be in this game as an opportunistic player in multifamily real estate, and you're going to be, whether you're in a limited partner in a GP, a limited partner in a fund like me, I'm a GP, you'd be a limited partner, or you're going to do your own deals and syndicate and fund manage and joint venture, you're going to be looking for the same deals that people are talking trash about. It just so happened to be somebody that you can put a name and a face to and talk trash about, but you shouldn't. Right? I I don't like bullies. I just see all that and I'm like, dude, why bother? I'm not talking about him. I'm talking about the same conversation that you would have with your investors or you would want to hear as an investor to say, where's the market? Where's the opportunity that you see out there, Victor? And we're like, hey, Bell Capital is looking for distressed sellers, not distressed assets. This person is under distress. We think we can come in, take over this asset at a discount, make money for our investors, and we will relieve this stress on this person so they can actually move on to other assets in the portfolio, and we can take this one at a discount. We're going to do it, or some other institution is going to do it. It's just whether you're going to want to make that money with us or somebody else. And if you're a person that doesn't like to do that, just, I don't know, start a flower shop. So anyways, um, Again, I'm not really one to do videos like this. This is not about him. This is about the market opportunity and whether you're going to be able to take advantage of it or not. There's massive opportunities. There's $2 trillion worth of debt coming due over the next few years. There's disjointment in between where the market is, cap stacks, multifamily assets that are operating, Class A, Class B plus properties in great locations. There is debt problems as rates don't come down, people can't extend and pretend any longer. They got to come to market. That's where we're headed. But if you're not poised to take advantage of that, like we are for our investors, like hopefully it's you, then you're just going to see it complain and you're going to miss it. You're going to miss the biggest opportunity of your lifetime. I'm not going to miss it. I've been waiting for this. And hopefully, you, as potential investors for us or for yourself, you see this as an opportunity, not something to stay away from. You see it as something to be able to say, wow, if it's happened to him, it can happen to anybody, and let's go out there and make some money. All right. So I hope this helps. You guys have a great day today. If you're interested in having more of a conversation with me about it, leave it in the comments. Give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. But see that as a $15 million opportunity, not a $15 million loss from somebody else, man. All right. So have a great day today. Let's get after it. Boom.